All right. Well, welcome to the Boring Millionaire. My name is James Lamantia.
I'm Nick Polari.
And we are the Boring Millionaires. So today is Friday, January 17th. It's a little after 4 p.m. We just closed on the market. The S&P closed at 59.96 and the NASDAQ closed at 19,630. That's pretty great. I mean, we're going over the technical analysis of why we think the bottoms are in. We saw over the past 3-4 weeks a little bit of turbulence. It hit all the floors we wanted to see. It was showing a lot of support where we needed it to show support. And all signals are green. We're going to move higher into the market. Basically, every episode we've had since we started, it's been between 6,000 and 5,800. So I like to bring that up because it just shows how the market trades in a range. When it's in this little stagnant period, that's when you bulk up on your positions, you refortify your portfolio. And then when we start to take off, all green lights are moving forward and we're in good shape.
No, exactly. And like I was saying before, it is the perfect time to buy. We're already back. It broke 6 today.
Yeah.
I mean, it did close at 5,996, but it broke over 6. So we're in good territory. I mean, even the NASDAQ's up. There's nothing really to worry about. It's just, like you said, it just swings. And, you know, there are the buying opportunities, though, because you knew everything was going to be good. There was some bad news, hurts the market a little bit. But it's not like the market was taking dive bombs, you know?
Exactly.
It was just slow bleeds. So it's really nothing to worry about.
Not at all. And at the lowest of this little stagnant period, we were only 4% off of the record highs. So if you go to your typical store you normally go shopping at, they're having a 4% sale. It's just extra discount on something you're already buying. So perfect time to be investing in stocks when we see the market off its highs. The all-time high on the S&P is 6,100. So at 60.39, we're only 1% away from an all-time high. So we're really in arm's reach. You know, it's not a far cry to say we're going to see record territory. And like I mentioned, all this support, the charts are showing us that we're in motion to see this record high. So I'm very excited for it.
If this is, your first time watching, it's really simple to get in. Just download Robinhood, Schwab, anything like that. You can just deposit a check, link your bank account. You can put money right in. Most of the time they'll credit it as long as you're not buying dumb stocks. And you can start buying like right now. So I think it is a good time to get in, especially since we're starting to recover.
It is exactly that simple. There's no challenge to really getting yourself involved as far as downloading the app, putting the money in. And you even mentioned it too. It's a good point to mention. As long as you're buying blue chip stocks, the type we typically recommend, they'll even credit you if you put the check in on the mobile deposit. They'll say, all right, valid bank, let's give them the funds to trade with. We want to get them in and you're ready to go. So there's no time to waste. It takes one afternoon to get your account set up and you could just jump right into the market. And it is a perfect time to jump into the market because we're heading into earnings season. So the banks always kick off earnings season Wednesday, the 15th. We saw most of the major banks report. We had Wells Fargo, Morgan Stanley, JP Morgan, and Bank of America. And I just want to tune into JP Morgan. Last week, we put a buy signal on it. That buy signal, it was at 246, and we now are closed at 259. So we had a 5.25% gain on JP Morgan. That's halfway to the S&P market average per year. Great start. Just want to reiterate why you might sometimes want to buy ahead of earnings reports that you anticipate are going to be good.
And exactly. And also with all the banks reporting good, I think it's going to have a positive outlook on how the rest of the earnings season is going to go. Pretty much all the banks killed it. So that's always a good sign too. Wells Fargo was at 71. It closed at 77. So that's 8%, close to that 10. And I've been holding Wells Fargo. I know I've picked it on my $50 list. I've been holding it in my long-term account. So that's one that is definitely a good one to look into. Morgan Stanley was 124. It closed 138-ish. So that's 11%. There's a lot of gain right there. That's already over the 10%.
Yeah, so you're already beating market average just on a well-timed buy on Morgan Stanley. And, that's not the case every single scenario, but to Nick's point, they are killing it. General aura is that the banks are killing it. They put out earnings, and not only are they beating on earnings, but their forecast is great. And we always like to mention, we're investing in the future. You want to put your money into the Jetsons, not the Flintstones. And with that said, with all these banks, investment banks nonetheless, with all of them saying that, their foresight for 2025 is good, there's no reason the Apples and Amazons and Home Depots should have a poor foresight for the year to come.
And that's the perfect thing, too, with the foresight, because you could kill it on earnings, but let's say your outlook to the future is a little shaky, then it could hurt your stock because, you make the money now, but you can't make the same money, or you can't grow the same next quarter. You know, you can have a good quarter and then you're expecting a bad quarter. So that puts a little fear into the stock, into what people want to invest in. It might cause a little bit of a sell-off, or it could be vice versa. You could miss this quarter. Next thing you know, it's like, yeah, we had bad earnings, but here are the steps we're going to take. This is the outlook we have to become more profitable or to grow the company in the next quarter. So it gives people the hope. Like you said, buy the rumors, sell the news.
Exactly.
You're betting on the fact that they're going to do exactly that. They're going to grow their company. Their earnings are going to be better. And, you know, if they have that positive outlook, it is more of a security to invest in something as it falls on bad earnings, so that you have a positive outlook on the future.
Of course, yeah, well said. And, you know, you want to invest in companies that are confident. If you hire an electrician and he's like, oh, yeah, no, I think I could probably get this done, why would you hire him?
Yeah,
so
exactly.
It's as simple as that. You want companies that are confident in their outlook to the time ahead, even if things are rough in their earnings report. How do they handle it? Mm-hmm. It's a great way to look at it.
No, exactly.
One company in the bank's earnings reports this week I want to touch on is PNC. So that was the only one that reported on the 16th as opposed to the 15th. They did not just knock it out of the park. Their report was a little shaky. On Wednesday afternoon, it closed at 202. Thursday morning, after they had their earnings report, it fell to a low of 185. But by the end of the trading day, it did reach a high in that trading day of 202. So back and forth in 2 trading days. It was 202 on Friday, not Thursday. Let me correct myself. But the point I want to make is, if you saw it fall on earnings and it went to 185, let's say you get it at 190, you know, you're not buying it at the cheapest it's going to get. It's not the way it goes. But you ride it up to 198. It's just about a 4% gain in 2 days by buying the weakness on the stock. We always say buy the discounts, buy when they're not looking great. It's a perfect example of why it works, how it works. I'm glad to see the foresight that we saw in these earnings reports. I really do believe that this is going to be a great season, and I'm focused though on the Mega 7 this season. That's who I want to look at.
No, yeah, they're always a nice, good, strong group of companies that you can really rely on. I mean, they are pretty much the top of the market. They're the blue chips I know I love to invest in. I know we've mentioned it a million times. I mean, you've probably heard us say these stocks. I mean, everybody knows them. It is Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla.
So the reason that they are the Mega 7 is because they are the $7 trillion companies. That phrase was coined a couple years ago. In due time, there will be more companies to break that $1 trillion mark. To focus in on these 7, they are, I would say, the most important 7 stocks to watch during earnings season because of their market caps of trillion plus. You know, that's a lot of market cap movement all around just 7 stocks. Typically in earnings seasons before, they don't really schedule them on the same days. However, we have 3 on the same day in this month. It's January 29th. We have Tesla, Meta, and Microsoft all on one day. We're hoping for positive earnings so that it doesn't decimate the market. Yeah. But on the contrary to that, if they all knock it out of the park and they're all up 10, 15% after their earnings reports, the market the following day is going to be just ridiculous.
Crazy. And we also have Apple the next day. So just roll right into Apple. Apple takes off. Yeah, it is pretty crazy. I do love these 7. I remember you mentioned to me one time that it actually used to be the Mega 6 until Nvidia decided to sneak in. And I mean, we've praised Nvidia for what it is a million times, so don't really have to go into it too much. But I do love that. I do love that it snuck its way in there. Yeah,
and it was a power rally. It was basically around 120 billion in market cap, and then it just had 1,000% run where it broke into 1.2, and now it's sitting with the big dogs, the major leagues.
Exactly. But like we've been saying with the AI, with all of that technology, Nvidia is really the front runner and all of that. They're going to need them for all the chips. It makes sense why they're in there. It makes sense why they're such a good company. But all these 7, I know I hold them personally. I do love every single one of them. I mean, I watch them all the time. Tesla, I love Tesla. I love Nvidia. I have great stories on how I got in on them at the perfect time. Even Apple. I mean, I bought them on a 150 dip and, you know, it went up, split. So, I mean, it had the other fall and I picked up some more. You can never go wrong with Apple. Even when they had the antitrust suit, I grab more.
Exactly. Those are the perfect times to be grabbing more. And I would just want to say it's the Mega 7. But if I'm being transparent, these are 7 of my top 10 holdings. 2 of the other ones are Visa and MasterCard. And the 10th one is the UPRO Index Fund. Where I'm getting to with that point is my strength is in these 7 companies, the broad market, it's all about just refortifying your positions in the strong companies that change the world we live in. And all 7 of these change the whole world as we live in it. And with it being a whole world picture, I know there's tensions about how they operate with China. All of these businesses have major markets in Asian and Chinese markets. I'm not saying we're going to have positive relationships with China, but in Trump's previous presidency, we had good commerce with China. And with good commerce with China, all 7 of these companies are going to massively benefit from that. And there's no reason to get rid of them. I love these 7.
Exactly.
Absolutely.
Like you said, we don't need to have the best relations, but as long as business is going as usual or better, that is more of the important part of it, because if not, then it can affect these stocks a little bit. But like you said, we've had good commerce before. I don't think that any of these companies would, one, take it lying down. I don't think that China would just outright, get rid of any of them. And I don't think the market will be hit too hard. And even if, I think they already have provisions on what they would do if things come to that. So.
Yeah, I agree 100%. And, a lot of the tensions coming from the Chinese narrative are stemming from the tariff conversations that are being had. Whether they're in, whether they're not, the future will tell. But even if tariffs are in place, the way that we're expecting them to be, companies aren't going to just eat that, just like higher taxes. It will be a trickle-down effect where the cost will be displaced to somebody else, and commerce will continue as usual.
I agree with those points. And actually rolling off that, on my $50 list, another one I want to double down is Coinbase, because Trump wants to be pro-crypto, and there's a lot of a lot of stuff that we try to tell you to avoid. If you're too unconfident in getting into actual crypto, you can get into the place that pretty much brokerages it. The middleman of all crypto transactions, pretty much, because they are the most used crypto services.
And I just want to say that's a perfect way to put it. If you want to be involved in the market without being a cowboy, dabbling, being afraid you might buy the wrong coins, just buy Coinbase. Great umbrella way to be involved in the crypto space.
You don't have to take the risk, because they're making money off all their transactions.
And also, too, you don't have to understand all the wallet talk and remember your safety phrases and things like that. You just buy a share of Coinbase for $300.
Exactly. You don't need to know exactly what the cryptos do. You just buy, who's dealing with all of it.
Exactly.
So
perfect.
It is, I do like Coinbase. I mean, especially every time that crypto seems to be in a hype phase, it seems to always just do
follows
really
the
well.
trend, yeah.
So, why not get in on that? Another one also, P&G, Procter & Gamble. Gotta love it. Again, they make pretty much every household item you use. I mean, and we've said it before about investing in the world around you. They were at a high at 179. They fell to 158. So there's the opening right there.
Perfect,
so,
yeah.
Also investing in the world around you. Here's a new one. I'm investing in Johnson & Johnson. I mean, they make pretty much all the medicine you use. The Motrin, Benadryl, Zyrtec, Tylenol. I mean, even on the outside of that, they own Band-Aid brand. So they own Neosporin to go together, clean the cut.
Yeah, baby powder. So there you go.
My last one, another new one, not new to my holding account, but new to my $50 account, is Bank of America. I do love banks. I mean, especially with all of them killing it right now.
Yeah, absolutely.
Green light. I've held Bank of America since the COVID dip, so I think it's still a good time to get in. I mean, they just beat earnings. Everything's starting to turn, so that's pretty much where I'm putting my 50. So where are you putting yours?
So for my 50, I'm breaking it up into the $5, $10 increments, and that first $10 is going to go into Apple. Like we were mentioning, you just can't go wrong. I think they are going to kill it on earnings. Not so much like a foresight into the report, but just reading the charts, it's been hanging out between 225, 240. It's just about at its 3-month average. And I think along with that, if the report is even just decent enough, people are going to use it as an excuse to buy it and result in a rally afterwards. Pays a fair dividend. I love to get the income on the back. And then I am investing another $10 into Cisco. Now, there are 2 Ciscos. One is with an S, one is with a C. This one is with the C. They are a very old school staple in the telecom space. They pay an outrageous dividend of 2.6, and just want it in the account just to earn that income, catch it on the back end. NVIDIA is my next choice this week. We mentioned earlier about the grip they have on the AI space and the chip space. And I think there's just no denying that AI is the forefront direction that the world is moving in. I want to be involved in that. And like I said, I think they're going to overcome whatever China concerns surround them. And them, just like Apple, they've been in a little stagnant period for the past 2 to 3 months, basically between 150 and 130-ish. It's meeting its averages. So I just want to grab it while it's at this discount. My next one is Snapchat. I'm going with Snapchat. I've had it forever, but in the recent news of TikTok getting banned, I think Snapchat is a power play, honestly. So first of all, it maxed out at an all-time high of around $88. It's 11 right now, but it's been 11 for about 2.5 years. Whether you use the app or follow the company as a stock, not much has really changed in what they're doing. Not much has really grown in their adaptability, but with TikTok being banned now in America, it's nothing but open market, open safari hunting season. So this is their opportunity to totally change what they're doing and what their grip is in the world. And I will say I'm investing in the company based on that. You said it earlier, buy the rumors, sell the news. But if they are not confident in their adaptability and they don't make any power plays and they stay the same company they've been the past 2 years, I might change my incentive on buying Snapchat. Right now I'm buying it, but I would say 6 to 12 months, if they don't take advantage of this market opportunity, I would be a little turned off from the stock. But right now, total buy $11. I'm going a little heavy with it. And with my last $10, I'm buying ExxonMobil, another huge dividend that they pay. It's at 3.5. It fell pretty fair to 105, but it's found support there. It's been hanging out. Just typically speaking, in a generalized way, we always see gasoline and energy companies outperform under a Republican presidency. Along with that, earning the income, finding it at a discount, all signals say buy. So that's my 5, and I'm so happy with it.
Yeah, I definitely agree with the snap. I mean, it would be a huge missed opportunity if they didn't take advantage of this. Like you said, they have been a little stagnant on what they do. Face filters are fun, but that can only go so far.
Exactly, yeah.
And so with TikTok being out of the way, that whole corner of the market is just open. It's hunting season.
It is exactly hunting season, and they already have the network and subscriber audience of the Gen Z and millennial audience. So, you know, their market is right in front of them. They just need to develop the way to really engage them and have them, you know, involve themselves with the company.
And also, too, with that, I mean, like you said, if they don't do anything within like a year, I would probably consider getting out also. And I don't think it would be too risky. I feel ever since it hit its peak, it fell to around like, I think it bottomed at like 8, and then it kind of fluctuates between like 10 and 16, I would say.
Exactly,
so
yeah.
I think it is something that it's not really too risky, and you'll have time, and you could probably get out a little over where you get in, especially it being 11. Most of the time when I look at it, it's like $11, $12. So it usually fluctuates around this. To bring up your other point, though, ExxonMobil, I think, is a great buy because with Trump coming in on Monday, he is pro fossil fuels. He is pro gas. He is pro oil. He just wants to drill. He said it a million times.
Yeah, and he did it for 4 years,
exactly.
You know? So the proof is in the pudding. And I would just like to say, speaking on an economic standpoint, if we're drilling our own oil reserves and maintaining our own oil reserves, we are dictating the supply, increasing the supply while the demand does not change. So that is going to single-handedly drive down the price of gasoline and oil. That's economics. That's not politics. So I'm very excited to see all the positive outcomes of what we're going to see in a more economically sound environment. And with that, we are helping you navigate the new economic environment. We want to get you invested. We want to get you involved. And we want to, most importantly, make you feel confident in the way you're investing. We want you to build a nest egg, and we want you to not worry about it.
Exactly. We want to teach you how the markets work. We want to show you the opportunity. And like we said, it's always, you know, there's no real excuse anymore. It's so easy to get on any trading app.
It is. It's as easy as it could get. You download the app, you wire or deposit the check, and then you place your buy order.
Yeah.
You're in. One afternoon turnaround.
Never a bad time to get in. I mean, maybe Monday because it's closed for Martin Luther King.
It is.
But you could still download the app and have everything ready for Tuesday.
And you're perfect in saying that. You know, take the holiday to get your account set up, make your watch list, kind of have a preparation for the week ahead. And this week you could get involved and be riding stocks into record highs. So thank you for tuning in. Follow us on Facebook. Follow us on Instagram. You will not find us on TikTok. And with that, thank you.
Have a good one. See you.